Friends, welcome to our today's session. Since you have already covered the concept of residential status, now you know it is important for us to know the residential status to compute the total income of an assessee. And it is the total income which is chargeable to tax. But how we are going to compute the total income? That depends on residential status. And we know individual assessees as well as HUF assessees can have three possibilities as regards to residential status. They can either be resident and ordinary resident, or resident but not ordinary resident, and they can be non-resident. For all other assessees, there are only two possibilities. Can you guess what are these two possibilities? All other assessees here means companies, farms, AOP, BOI, local authority, artificial juridical person. For all of them, there are only two possibilities. Either they can be what?
Either they can be resident or non-resident.
Or non-resident. Okay. Now, friends, today's topic is about the scope of total income. That means depending upon the residential status, what will be the incidence of tax? That is what we are going to learn today. Let me share the screen with you. Before that, one more thing let me tell you. Broadly, see this incidence of tax or the scope of your total income on which tax is to be paid. Or you can say, what are the items that is to be included in the total income of a person? That depends upon its residential status. And broadly, without going to the technicalities of this definition and technicalities of the law, you can largely understand that we classify some incomes as foreign incomes and some incomes we call it as Indian. Okay, the intention of the law, if you try to understand, you'll find the intention of the law is that if the income is an Indian income, then it will be taxable for all. All means irrespective of the residential status. Whether you are resident or non-resident or resident but not ordinary resident, it doesn't matter. If the income is an Indian income, it is taxable for all. Right? And if income is a foreign income, then it is taxable only for resident. That means foreign income is not taxable for a non-resident. Understood the basic concept? So with this background, let us understand, let us go through the technicalities of the provisions of law. Going to share the screen with you right now. Now, for this thing, in fact, we need to learn various sections. So we can start with section 5 and section 6. We have already understood getting residential status. Then also section 9 is also important for us. If you refer to section 5 is talking about what? Scope of total income. Right. Section 5 provides the scope of total income. And the scope of total income is to be determined on the basis of residential status. So therefore, this total income depends upon a person's residential status. So there are three important considerations which are relevant to decide the scope of total income. What are the three important points? You can see this box. One is residential status. On that basis, we'll be deciding the total income. Second is the place of accrual, where that income is accruing or where that income is received. The place of accrual or receipt of income is important. Third one is the time of accrual, the time of receipt. So status, place, and time. These three things are important, or these three things are relevant to arrive at the total income. Okay. Right. If you see here, so I have listed out these three things. First one is the residential status of the assessee. Second is the place of accrual or receipt of income, whether it is actual receipt or deemed receipt. Here we'll be also understanding the concept of deemed receipt. Income may not have been practically received, but still it will be deemed that it has been received. That is the concept of deemed receipt. So this place of accrual or receipt of income is also important for us. then point of time at which this income had accrued or the income was received by or on behalf of the assessor. That is also all these three concepts are discussed in section 5. Okay, now this chart we are already familiar with, right? Yes or no? We have seen this chart earlier. This chart explains the residential status of various kinds of assets. And you
Yes,
know,
sir.
individual assessee, how we can classify them as individual, and HUF, how we can classify them as resident in India and non-resident. And once they're resident, again, we have to classify them as resident and ordinary resident, and resident but not ordinary resident. Individuals HUF can also may become non-resident. There is one more concept of deemed resident, but deemed resident means they will be resident, they will be treated as resident but not ordinarily resident. All other assessees can be either resident in India or non-resident in India. These concepts we are aware of. Okay. Now coming to taxability, depending upon the residential status, you can see here we have classified a person can be either resident or resident and ordinarily resident. Next is it can be resident but not ordinary resident. Third one is non-resident. And what are the kinds of income that will be taxable? They are written here. Okay. You can find a lot of similarity between these three kinds of things. Okay, resident but not ordinary resident, non-resident. So what is taxable? You see any income. Can you read it? Point number 1, 2, 3, 4. Anyone if you
Yes,
can.
sir. Yes,
What
sir.
is point 1?
Received in India,
Okay. Point 2.
deemed to be received in India,
Point 3.
accrues or arises in India,
Point 4.
deemed to accrue and arise in India.
That means any income which is received in India, deemed to be received in India, accrues or arises in India, or deemed to accrue or arise in India. All these things we are talking about Indian income. Indian income, that means always taxable to resident. And it's also taxable to resident and ordinarily resident. Because this is Indian income which is always taxable. Can you read what are the things which are written here? Resident but not ordinary resident. 1, 2, 3, 4, you can read.
Yes, sir. Any income received in India, deemed to be received in India, accrues or arises in India, deemed to accrue or arise in India.
So all these things are also taxable for a person who is resident but not ordinarily resident. And come here, third column, non-resident. Can you read what are the items here?
Yes, sir. Any income received in India, deemed to be received in India, accrues or arises in India, deemed to accrue or arise in India.
Yes. Are you finding any difference between uh, the income which are included for resident but not ordinary resident, and non-resident? Is there any difference?
No, sir.
No, they're same. And all these three cases we're talking about Indian income. Indian income means if it is received in India, deemed to be received in India. Deemed to be received means actually it is not received, but it is deemed that it has been received. What is the meaning of that term deemed to be received? I'll be explaining you shortly in today's session only. Then what is the meaning of this accrues or arises? That also I'll be explaining you in today's session. What's the meaning of deemed to accrue arise? That also I'll be explaining you in today's session. So all these things will be understanding in detail. But today, right now at this stage, just understand received. You have, I think you can understand. Deemed to be means it will assume that it has been received in India. Accrues or arises means actually it has not been received, but it is accruing. Accruing means, let us say you are depositing money in a fixed deposit account. When it will be maturing, you will be getting the interest. But before that, interest keeps on accruing. Is it not? So that is the concept of accrual. So if income is accruing in India, that is also Indian income, that is also taxable. Then deemed to accrue arise, there are also certain a list of items which are there under section 9. So those incomes we'll be discussing. If this is deemed to accrue or arise in India, that is also taxable. And you can see these this is what I call it as Indian income. And if this is Indian income, it is taxable for all, irrespective of the residential status. Therefore, you are finding it is same, whether you are resident and ordinarily resident, or resident but not ordinarily resident, or non-resident. It doesn't matter. Irrespective of a residential status, Indian income is always taxable in India. So these 4 points, is it clear to you?
Yes, sir.
Yes, sir.
Now, I'm adding one more point here. Point number 5. Will you please read it?
Any income which accrues or arises outside India.
Okay. That means this is what it is. This is a kind of foreign income. It is accruing or arising where? Outside India. But if the person is resident or resident and ordinarily resident, this will also be included in his total income. Right? So foreign income is to be also included. In which case, if the person is resident or resident and ordinarily resident. Is it clear to you?
Yes, sir.
Now, point number 5 is also added here, but if you can see, here it is added with the asterisk mark. It says any income which accrues or arises outside India. This is also foreign income. Foreign income will also be included in the total income of resident, but not ordinarily resident. But when asterisk mark is, means it is subject to certain conditions. What are these conditions? Conditions are that if that foreign income is derived from a business which is controlled in, or a profession which is set up in India. So if it is an Indian controlled business or Indian setup profession, even if that income is accruing or arising outside India, it will be still included with the total income of a person who is resident but not ordinarily resident. Is it clear to you?
Yes, sir.
But this is also foreign income. Point 5, this is also foreign income. But that is not here. But if the person is non-resident, then this type of foreign income will not be included here. That means it will not be chargeable to tax. It will not be included in the total income of a non-resident if the income is accruing or arising outside India. Is it clear to you? This chart, you may have a look at this chart. It will clarify you which are the incomes that is to be included in the total income depending upon the residential status. Just have a look. Can you remember?
Yes, sir.
Okay. Now, what is the meaning of or these provisions? The section 5 I'll be explaining you. Okay, which kind of income will be taxable for him? Now, to different kind of persons on the basis of residential status. So we'll be learning, you see, section 5.1. Section 5 contains all these things, scope of total income, all these things. So section 5.1 to section maybe up to section 9, I want to take you through those sections. So let me take you to the income tax department's website. Just give me a moment. As students of law, I expect all of you to familiarize yourself always, wherever time permits you, to visit to the income tax department website and familiarize yourself with the where. Right. So please read the law directly from the source. Yeah. So my intention is to take you to the income tax department website. Please tell me, what is the website address?
www.incometaxindia.government.in.
Right. So I'm taking you to that place only. incometaxindia.gov.in, because our intention is to see what is section 5. Now you see, Here, acts is there. Acts are there. Tax laws and rules. Let us see the act. Income Tax Act. I want to see section wise. Right, you see. These are the things we are discussing. Section 6 talks about residents in India. That we have already discussed. Right. And right now I'm talking about section 5. Section 5 is what?
Scope of total.
Okay. Section 5A is something different. Section 6 is residents in India. Now you see section 7. Section 7 talks about what?
Income deemed to be received
in India. And what is section 8?
dividend income.
Dividend income, how it will be included, that also we have a plan to learn today. And section 9.
Income deemed to accrue or arise in India.
Yes. So in fact, today our plan is to learn section 5. Section 6 you have already learned. Section 5, section 7, section 8, section 9. We plan to cover all this. Just let me show you how it looks like section 5. Just have a glance. Okay. Are you getting here? Are you able to see? Subject to these provisions of the Act, the total income of the previous year of the person who is resident. All income, whatever source is derived, which is received or deemed to be received in India, accrues or arises or deemed to accrue arises him, or accrues or arises to him from outside India during such year. That means all kind of income, whether Indian income or foreign income, is taxable to a person who is resident in India. Okay, so this particular provision, we had summarized it in the slide, so you can read this provision. Then let me also show you the other sections. Five, you saw it, right? Section C, you have already seen. What is section 7? Just have a look. Section 7 talks about, anyway, I'll be explaining you this thing. Income deemed to be received. Right, here you see, the following income shall be deemed to be received in the previous year. So 3 items are there, which will be deemed to be received. Don't worry, I'll be explaining you all these 3 items. Annual accretion in the previous year, to the employees recognized provident fund, all these things I'll be explaining this thing. But relevant section is section 7. Did you see it?
Yes, sir.
Okay. Now I also wanted to show you section 9. 8. Okay, appropriate time I'll be showing you dividend income. Or let us see section 8, then we'll go to section 9. Okay, let us say section 8. Section 8 talks about dividend income. This also I'll be explaining you. Okay, how dividend income will be included in the total income. You see, for the purpose of inclusion in the total income of an asset, how dividend income will be treated, it has been explained here. Same concept I will explain to you. Section 8 I will explain. Now, section 9 is important for us. Section 9, income deemed to accrue or arise in India. What is the meaning of this? You can find a list of items. Yeah, if you have seen. Income deemed to accrue or arise in India. Are you able to see it? 9.1. Are you seeing several items are there?
Yes, sir.
You're seeing there's a long list of items. All these incomes shall be deemed to accrue or arise in India. So out of this, the important things we'll be covering in our today's session. But if you want to learn in detail, then what you can do, you may refer to this act itself. This particular section you can refer to. Now you have seen the source, you can compare what we are learning in the class with the provisions. Okay, friends, are you comfortable? Will you be able to find out the appropriate section?
Yes, sir.
Okay, good. Or in your library, if you want, you can read the latest Income Tax Act also. If Act will be there, you can refer to the Income Tax Act 1961. Now, friends, we were discussing about this slide, right? And we have understood that Indian income is taxable for all, and foreign income is taxable to a person who is resident and ordinary resident. And foreign income is also taxable to a person who is resident and resident but not ordinarily resident. If it is a business which is set up in India, a business which is controlled in India, or profession which is set up in India. But foreign income is not taxable for non-resident. This concept we have understood. Now, first we will see what is taxable, what I showed you in that chart. Let us learn the exact provisions of the law. So this we are learning with reference to section 5.1. Section 5.1 talks about what are the things that will be included in the total income of a person who is resident and ordinarily resident. So which section?
Section 5, subsection 1.
Okay. Have you remembered what is section 6? Can anyone tell me what is section 6?
Sir,
Indeed.
residence in India.
Good. It talks about residential status. Right. So now if you see, if you read the total income of a residential assessee would be under section 5.1 consists of 3 things. Okay. What are these 3 things? Number 1 is income received or deemed to be received in India during the previous year. Second, income which accrues or arises or deemed to accrue or arise in India during the previous year. Third thing is that income which accrues or arises outside India, even if it is not received or brought into India during the previous year. So these 3 things is to be included in the total income of a person who is resident and ordinarily resident. These 3 things, so what we have done for our easy understanding, we have broken them into 4 pieces, which is there in the previous chart. Okay, so what the chart shows, what the picture was showing, these 4 points, and these 3 points are same. Okay, you can have a look at this. Income received or deemed to be received in India. Income accrues or arises or deemed to accrue or arise in India. Or income accrues or arises outside India. Even if that means outside India means here we're talking about the point number 5. That means foreign income. Okay. Will you be able to remember this thing? If you read the section 5.1, you can find out these things are there. In simpler terms, a resident and ordinary resident has to pay tax on the total income accrued or deemed to accrue, received or deemed to receive in or outside India. Okay. Is it
Yes,
clear?
sir. Yes,
Is
sir.
it clear to you? Okay, good. Now, next is resident but not ordinarily resident. You know, in this case, some condition was attached. I remember. Can
Yes,
anyone
sir.
tell me what is the condition? Condition is attached with respect to foreign income, not with respect to Indian income. Indian income is always taxable for all, irrespective of the residential status.
Yes, sir. Sir,
Okay.
in this, what happens is, if the foreign, if that business is set up in India, or the profession for which he gets the income, and but it is coming from outside, that doesn't matter. It has to be included in the total income.
The condition is that if foreign income may be coming from business and profession, but if the business is controlled from India or profession is set up in India, then that will also be included in the total income of a person whose residential status is resident but not ordinarily resident. So what is taxable for a person who is a resident but not ordinary resident? Please read point number 1.
Income received or deemed to be received in India during the
Means it has
previous
got
year.
two components: income received in India and income deemed to be received in India. Point number 2.
Income which accrues or arises or is deemed to accrue or arise in India during
Here
the
also it has
previous
got
year.
two parts: income which accrues or arises in India, or income which is deemed to accrue arise in India during the previous year. And point number 3.
Income derived from a business controlled in or profession set up in India, even though it accrues or arises outside India.
So even if it accrues or arises outside, that means here we're talking about foreign income. But if it is derived from business which is controlled in, or a profession which is set up in India, then that will also be included in the total income of a resident who is resident but not ordinarily resident. Okay.
Yes, sir.
All other income accruing or arising outside, which is not received. If it is received in India, it is always taxable. But if the income which is accruing or arising outside India, which is not received or deemed to be received or deemed to accrue or deemed to arise in India, would not be included in the total income of a person who is a resident but not ordinarily resident. Okay. Other income means we are talking about the income from a business which is not controlled in India, or from a profession which is not set up in India.
Sir, excuse me.
Yes, please.
Sir, what if a person has taken some loan from India and he is planning to settle his business abroad? Sir, how will be the business deemed like the accounts or the balance sheet, sir?
So if you're talking about the taxability of that business income, we have to first of all we have to see what is the residential status of that person. If that person is non-resident, then absolutely no issue. Okay. But if the person is resident but not ordinarily resident, then we have to see where from the business is controlled. Okay, whether it is controlled from India or not. If it is controlled from India, then that business income will be included in the total income of that assessment. A person has taken a loan from India, does not show any evidence, clear evidence that it is controlled from India. But if you can conclude that shows it is controlled from India, then of course that income will be included.
Okay, sir. Okay, sir.
Okay. So law has made it clear that we have to see if a person is resident but not ordinary resident. We have to see whether the business income is controlled in India or it is generated from a profession which is set up in India. Now you have to prove that whether it is controlled from India or not. Okay, for that you have to produce some evidences. On that basis you can see. But just because someone has taken loan from India, I don't think that this is enough evidence to show that it is controlled from India.
Okay, sir. Okay, sir.
Okay. But if it is some other evidences are there, let us say directors are residing here. Or sorry, yeah, we are talking about an individual. Let us say person is residing here in this country. Okay, decisions you are taking from this country. Then you can say it is a business which is controlled from India. Okay.
Yes, sir. Yes.
Got it, right. Now, friends. Now, you might have observed that the computation of total income of resident but not ordinarily resident is the same as in case of resident and ordinarily resident, except the fact that income that accruing or arising from him outside India is not to be included in his total income. Are you getting this point?
Yes, sir.
Okay. Not to be included in the total income means provided it is not derived from a business which is controlled or a profession which is set up in. So therefore, if you read the next paragraph, it says, however, where such income is derived from a business controlled in or a profession set up in India, it must be income. Otherwise not. Okay. Now let us move
Yes, sir.
to the next category of person, which is non-resident. As you are aware of, as we are discussing. So for non-residents, foreign incomes are not to be included. So therefore, what is taxable? We need to refer to section 5, subsection 2. A non-resident's total income under section 5.2 includes, as you can see, there are only 2 items. Third item is not there. What is item number 1?
Income received or deemed to be received in India in the previous year.
So income received in India, income deemed to be received in India. Both are included. Point 2.
Income which accrues or arises or deemed to accrue or arise in India during the previous year.
Yes, income which is accruing in India or rising in India, or which is deemed to accrue or arise in India, both are to be included for a non-resident. His foreign incomes will not be included here. Right? It doesn't matter where from the business is controlled from and where the profession is set up, because its residential status is non-resident. Non-resident means only Indian income, if any, will be included. Foreign income will not be included. Okay, friends.
Yes, sir.
Now, earlier, initially, we were discussing about income tax law. I had told you that to understand income tax law, it's not that you have to go through the provisions of Income Tax Act only. You have to go through the Income Tax Act 1961. You have to go through the Income Tax Rule 1962. Plus, Finance Act of relevant to this year is also important for us. Plus, what else? Clarification, circulars, notification issued from time to time, that is also important for us. So here is a circular in the context of this taxability or the scope of total income. This circular is relevant for us. Income Tax Department has issued this circular, the circular number 13/2017, and again one more circular, 17, circular number 17/2017. The summary of the circular is written here. Income by way of salary. Here we are talking about salary income received by a non-resident seafarer who is traveling in a ship. Okay. For services rendered outside India on a foreign going ship with Indian flag or foreign flag, doesn't matter, but it should be a foreign going ship. And there is a non-resident seafarer who is receiving salary. And this salary is received into the NRE bank account maintained with an Indian bank. Okay, salary must not have been credited to some other account. It must have been credited to NRE, non-resident external account, which is specifically important. With an Indian bank, any Indian bank, okay, shall not be included in the total income. That means this salary, it may be accruing in India, but it will not be included in the total income, provided it is received by a non-resident for services rendered outside India on a foreign going ship with or without Indian flag, that doesn't matter. Okay. And that is received into his NRE bank account maintained with an Indian bank. Did you understand? This is special provision not exactly provision. This has been addressed in this particular circular. The circular is also relevant for us. This is an exceptional thing.
Sir, what is the NRE bank account?
What is?
Sir, NRE bank account.
It's a special account which is called as a non-residence external bank account. Okay. So this type of accounts can be opened in an Indian bank by non-residents. So they can keep money in that account. So detail what type of account we have to, in fact, do a research on that thing. So to the extent my knowledge I am aware of, I feel that NRE account you can keep it in foreign currencies.
Okay, sir.
Okay. But exactly what is that? You have to inquire with the bank. Or you can Google it and find out what is that NRE account. Okay. So there are other accounts like NRO account, non-resident ordinary account, NRE account is external account like this. So there are some differences between them. So we need to actually research in that thing to understand what is that. Well, friends, now have a look at these two charts. Both the things you have already seen. We have already discussed the residential status, what are the possibilities, and we have seen what are the incomes which will taxable to which category, depending upon residential status. Okay.
Yes, sir.
Both the things you have already seen. The same chart I have explained here. Another form you can have a look. The residential status, which are discussed in section 6, and scope of total income, which are discussed in section 5, and both are connected. Okay.
Yes, sir.
Yes, sir. Yes.
So if a person is resident and ordinary resident, his global income is taxable. That is Indian income as well as foreign income. Okay. If he is resident but not ordinary resident, Indian income is taxable. Foreign income is taxable provided it is derived from a business controlled in or a profession set up in India. For non-residents, only Indian income will be taxable. This is the concept. Now, friends, let us understand the meaning of these terms. First important term which is relevant for us is what is the meaning of accrue or arise? In plain and simple English, if you talk, this means earned. That means you might not have received it, but you have earned it. The example I gave you, that let us say a fixed deposit is maturing after 5 years. So you might not have received the interest. Now you'll be receiving it at the end of the 5th year. But interest is accruing or interest is arising out of that fixed deposit. Isn't it? Yes or no?
Yes, sir.
Sorry, sir. I didn't.
Let me give you another example. Let us say,
Sir,
Yeah.
I said due to my issues in connection, I didn't hear what you said.
okay, I was explaining you this thing that let us say we are trying to understand the meaning of accrue or arise. Income accruing or arising is different from income received. Received you can easily understand. Income is received. Okay, that means you are having the possession of that. But accruing or arising means you are not possessing, but income is generated or income is earned. For example, if you are depositing a fixed deposit in a bank for 5 years, you will be receiving the interest after 5 years. But during these 5 years, let's say at the end of every year, our income is accruing out of that deposit. Our income is arising out of that deposit. But it has not become due. That's why you are not receiving. but it is accruing but not due. You can think of another example. Let us say someone is doing a job. That means what he is doing. Every day he is performing his duty. When he is performing his duty, his salary is accruing. It may become due on the last day of the month, or it may become due on the first day of the next month. It will become due. After that, once it becomes due, it will be received. So due is a different thing. Receipt is a different thing. But accrual means income is earned. Did you understand this example?
Yes, sir.
Yeah. So that is what law has specified. So when we use the word income accruing arising in India, income accruing arising outside India, so here we have to keep in the mind that even if it is not received, income is accruing arising, that is taxable, depending upon the person's residential status. When I say accrue, it refers to the right to receive it. Okay, you have got a right to receive that income, but it's not necessary you have a right to enforce payment because it is not become due. You have got a right to receive that income, but you don't have any right to enforce the payment because it has not become due. When it becomes due, you can enforce it. Understood the difference?
Yes,
Yes,
sir.
sir.
Okay. Similarly, in many government securities, when money is deposited, they becomes due on a fixed date. But interest is accruing on daily basis. Okay. So I think you have understood the meaning of accrue or arise. Now, next question or next issue is about income received in India. Very simple to understand. I think all of you understand the meaning of this. When I say income received in India, that means the first and absolute position is obtained in India. Okay. For let us say someone is working in US and he got a salary in US. Where he has got the first and absolute position. Is it in India or in US?
US.
US. Let us say the same money is remitted to India. Let us say he is having one more account in India and he's transferred from that US account to Indian account. He remitted that money. Now, what is coming to your mind? This remittance, will it be considered as income received in India and it will be taxable in India, even if the person is a non-resident? What do you think?
No, sir.
Why no?
Because
It will,
there is
sir. It will.
no absolute position.
Yes, this is not an income which is received in India. Because first and absolute position was in US. Subsequently, what happened? That is remittance. Remittances are not. So income is received in US and it is remitted to India. So remittance is not an income. Did you understand?
Yes, sir.
Clear to you? No query so far.
No, sir.
So this is how we will be applying the principles of taxation in law. Okay.
Yes, sir.
Right. Now, when I say receipt of income, it refers to only the first occasion when the recipient gets money under his control. This thing happened in US. And once the amount of money is received as income, the remittance or transmission of the amount from one place or one person to another person does not constitute receipt of income. So remittances are not taxable in India. As receipts are different from remittances. Here, one question may be coming to your mind. It is the concept of TDS. Some of you might be aware of what is TDS. Income received in India, you have understood. Are you aware of what is TDS? That is tax deducted at source. Have you heard of this thing?
Yes, sir.
Sometimes you might be knowing that, let us say, tax is deducted from salary. Tax is deducted from the payments made to contractors. Tax is deducted from the rent that you are going to receive. Tax is deducted from the professional fees that are charged by professionals. So when tax is deducted, let us say a professional has raised a bill of 1 lakh rupees and tax is deducted 10,000 rupees, and how much he is receiving? 90,000 rupees. Okay. Are you getting me?
Sir, TDS deduction percentage are 1 or 2, sir?
TDS deduction percentages are different. Depends upon the type of income.
Sir, as far I know, it has the main aim to deduct, taxes from various sources of income, and it also differentiate the sources of income of individual. Sir, what I have to ask is, I have seen the practical sheets where the TDS has been drafted as 2% or 3%. Sir, it is fixed or it has something to do with the total amount?
It is fixed depending upon the type of income, or rather you can say depending upon the type of payment. Okay, depending upon the type.
Okay.
So if we are talking about the contractors, it may be 2% or 1%. If you're talking about the example of a professional, it may be 10%. So like this. Okay.
Okay,
And
okay.
if you have remembered, the beginning I had shown you when you were trying to familiarize you with the provisions of income tax law. At that time, I had told you, I had taken you to some areas. One of these areas was rates and charts, tax rates and charts. So if you
Yes, sir.
visit there, you can find out what is the TDS rate, number one. Number two is that I had also familiarized you with the use of income tax calculators. Yes or no?
Yes, sir.
So there is a similar calculator which is called as the TDS calculator. Okay, so you can look at that, you can find it out. Okay, for your benefit or for the benefit of others also, let me take you to the income tax department website once again, so that you will be developing the habit of referring to the income tax website to find solutions to your queries. Okay, this is the income tax department website. All of you are familiar.
Yes, sir.
Yes, sir.
So here I am showing you this tax charts and tables. Can you see it here? Now you see. Here you see. Can you find out TDS rates?
Yes, sir.
If you click here, you can find out, right? You see, these are the rates. As you can see, rates are different. What you are talking about, you are talking about the contractor. Then serially you can see contractor will come under 194C. You can find out, you see, it can be 1% or 2%. In which situation, if the contractor is an individual or HUF, then 1%. But others, it is 2%. The example I was giving you right now is about the professional charges. I told you 10% because I was referring to 194J. You refer to 194J. Here you see 10%. Okay, for technical service, certain things 2%, otherwise it is 10%. Understood? Okay, if you're talking about the rent of building, you see 10%. Rent of planted machinery, 2%. So you see these rates are different. Are you able to see?
Yes, sir.
So I think it is clear to you. Now you can at any time you can refer to this. Okay. And one more thing also you can refer to. Let me take you to this tax calculators. Or if you can go here, where here is a link tax calculator, or you can go here, tax tools also, you can find tax calculator. Okay, are you seeing these calculators here?
Yes, sir.
Okay, now tell me, here you see this page, some calculators are there. So let me take you to the next page. Here you see some more calculators. Can you see what is the second calculator? Can you find it out?
So TDS.
TDS calculator. Okay, TDS calculator. If you click here, it will tell you, ask you what is the financial year, what is the residential status. That is why residential status is important. You see, always it is asking you residential status. What is the type of receipt? Here you can see all the sections I told you, no? So you can find it here, provided you have already selected this thing. Let's say I'm selecting 2022 residential status. Let me take it as resident. Here you see the type of payment. Sorry, recipient type. Recipient type, you can select, let us say company, individual, anything you can select. PAN is not available. It's available or not. If PAN is not available, then tax has to be deducted at a higher. So we'll assume that PAN is available. So we'll not tick it here. Now here you have to select the description. You see, these are the amounts on which tax is to be deducted. Not amount. Okay, you can select anything. Okay. So let us say 194J I'm selecting. Let us say amount of payment we'll select. Other payment I'm selecting is not for cinematographic film. Okay, let us say the payment is 5 lakh. Just a minute. Let me. Just a minute. For some reason, the calculator is not responding right now, but we can check it. Some technical issues that are there right now. You can try later on, we can find out. It's not. So there is, it seems there is some technical glitch for which it is not calculating, but some other time I'll be showing you how it calculates. Okay, you can do it, but you can find out the rates and charts right now.
Yes, sir.
Okay, you can refer to, you can
Yes,
find
sir.
out the rates and charts. Sorry, the rates of TDS. Okay, is it clear to you?
Yes, sir. Sir, in the case of employees, sir, the TDS will be deducting on the IT declarations of their salaries, right, sir?
You see, if you see that charts and tables, various rates are there, but you will find that for salaries, there is no rates. So what will happen on salary? You have to estimate what will be the tax liability of that employee, right? And you are supposed to deduct it equally at the end of every month. So you estimate the tax liability. How will you be estimating? On the basis of declaration given by the employees. You know how much salary is to be paid to him. So employee will give a declaration what kind of investment he is having. Okay, so on that basis, you'll be able to compute his tax liability. Then you need to, as an employer, you need to deduct tax at source equally every month. So if for some reason it is not possible to deduct equally, somehow you have to deduct. So that means before the last month's salary, you have to ensure that tax has been properly deducted. So that is the responsibility of that.
Okay.
Is it clear to you?
Yes, sir.
Yes, friends. As you are discussing, so many times you can find that tax is deducted at source for salary income from other kind of income. We have seen in this tax charts and tables, you can find out different items are there on which tax is to be deducted at source. So those income will be deemed to be received. Those income means the TDS part shall be deemed to be received in India. For example, let us say your professional fee example is giving you 1 lakh rupees and tax is deducted at source. Right? Suppose you, as a lawyer, you have given a bill for 1 lakh rupees and tax is deducted at source 10,000 rupees under section 194J. Consequently, you received 90,000 rupees. Did you receive that 10,000 rupees? Did you receive that TDS amount?
Sir, can you please repeat the question? I couldn't hear properly.
Asking you. Let us say you as a lawyer raising a bill to your client for 1 lakh rupees and client has deducted tax at source 10%. So client has paid you 90,000 rupees. So if you see this transaction, actually you have received 90,000 rupees. My question was, did you receive 10,000 rupees TDS? Whether you received that 10,000 rupees money?
Yes, sir. It shall be deemed that as if I
Shall
have
be
received.
deemed to be received. Yes, it's not received, but it shall be deemed to be received. That is the concept of deemed to be received. Okay, I think that part is clear now. Okay, so if you read this last point, which is there in this slide, TDS shall be deemed to be received by RCC and shall be included in his total income. Okay, so your income will be considered in this case 1 lakh rupees. Now, next concept is that income deemed to be received in India. So if you refer to section 7, you will come across 3 provisions which talks about income which are deemed to be received in India. Apart from that, in some other situations also you've seen income which is to be deemed to be received in India, like this tax deducted at source will be deemed to be received in India. This has been provided on section 198. Clubbed income. Earlier we have discussed in certain situations, income of some other persons also gets clubbed with the total income of the RCC, which are covered under section 60 to section 64. So this clubbed income shall also be deemed to be received in India. Unexplained on unrecorded investments are also deemed to be received in India. Unexplained on unrecorded money. So section 69A deals with that. That will also be deemed to be received in India. Okay. So then section 7 contains 3 provisions. 7.1, 7.2, 7.3. We'll be seeing that. Okay, so let us see that section 7 talks about these 3 things as you see. Contribution in excess of 12% of the salary to recognized provident fund, or interest credited in excess of 9.5% per annum. Okay, that is annual accretion to the credit of recognized provident. So excess contribution to the recognized provident fund or excess interest credited to the recognized provident fund shall be deemed to be received in India. That will be deemed to be income of a person. Understood that thing? Recognized provident fund means provident fund account which is recognized by income tax department. Similarly, contribution by the central government or any other employer, central government employer or other employer, in the previous year under a pension scheme, which is referred to under section 80 CCD. So these kind of contributions which are made by the employer to the pension scheme, that will also be deemed to be received in India. Employer making contribution, but that will be treated as employee's income. Employee's income. Okay, contributions are made on behalf of employee by the employer, but this will be treated as employee's income because this will be deemed to be received in India. Similarly, amount transferred from unrecognized provident fund to recognized provident fund. Okay, if there was some unrecognized provident fund and that fund gets transferred to a recognized provident fund, the transfer balance shall be deemed to be received in India. Transfer balance means the employer's contribution and interest thereof. Employer's contribution and interest on employer's contribution shall be deemed to be income which is received in India. So these are the three items which are there under section 7. But apart from that, you have also seen other provisions are there which deals with the concept of income deemed to be received in India. Okay.
Yes, sir.
Yes, sir.
Okay. So received in India. Now you got a fair idea what is it? I mean, income, the meaning of income accrued in India, deemed to be received in India, received in India. Now here is a quiz for you. Try to answer this question. So as you see in this table, first serial numbers are there. 1, 2, 3, 4, 5. 5 situations are there. And the types of income, in fact, what are the particulars income they are discussed here? Which kind of income we are talking about? And if you see the residential status, there are 3 percentages. ROR stands for
Resident and ordinary resident.
ordinary resident. And RNOR
A resident but not ordinary resident.
and NR.
Not non-resident.
Okay. First type of income you see, any income received or deemed to be received in India, whether earned in India or elsewhere. Tell me in which situation this will be taxable.
Sir, resident but and ordinary resident.
And what about resident but not ordinary resident?
Sir, in that case, that we have to see whether the business or the profession is fully set up in India.
But here it is talking about income received. Received in India. That condition you are talking about, that is applicable to foreign income. But here we are talking about Indian income. If it is Indian income, friends, then it is taxable for all. Yes or no?
Yes, sir.
It is taxable for all. Now, second, please read the second point.
Any income which accrues or arises or deemed to be accrue or arise in India during the previous year, whether received in India or elsewhere.
So here it is talking about income accrues or arises or deemed to accrue arise in India. Please tell me. It is taxable for whom?
There are all.
Taxable for?
So the first one. The ordinary resident.
Then is it taxable for RNOR?
No, sir.
Yes. Yes, sir.
No, sir.
Yes or no? Here you see this is accruing or arising in India or deemed to accrue arising. Yes or no?
So for me it is yes, for him it is no.
Answer is yes. Okay. And since it is accruing or arising or deemed to accrue or arise in India, tell me for non-resident is it taxable?
Yes, sir.
Yes, for non-residents also it's taxable. Okay. So here you have understood income received in India, deemed to receive in India, income accruing in India, arising in India, deemed to accrue arise in India. All are taxable for all. Is it clear to you?
Yes, sir.
Point number 3. Please read this third point.
Any income which accrues or arises outside India and received outside India from a business controlled from India.
Here, this is business control from India. Now we are talking about ROR. For ROR, is it taxable?
Yes, sir.
And for RNOR
Yes, sir.
and for NR?
No, sir.
Okay. Now, point 4. Any income which accrues or arises outside India and received outside India from a profession not controlled from India.
Sir, none.
First case, ROR.
No, sir. Yes, sir.
Yes, for ROR, Indian income, foreign income, as I have told you, is global income is taxable. But what about RNOR?
No, sir. Not taxable.
Why?
Sir, it is not controlled from India. So,
Not controlled from India. What about NR?
no, sir.
No. Point number 5. Any income that accrues or arises outside India and received outside India during the previous year, preceding the previous year, that is not received during the previous year, it is received during the previous year, preceding the previous year, and remitted to India during previous year. Meaning it is received in some other year and remitted to India during previous year. Now talk about its taxability. Is it taxable for ROR?
Yes, sir.
RNOR?
No, sir.
NR?
No, sir.
Try to understand, we are not talking about income here. Here the question is saying that it is received in some other time, but remitted to India during the previous year. Here you should address the issue that this remittance is taxable or
Sir, remittance is not taxable.
taxes are not taxable. Okay, so that is the concept in this question. Is it clear to you?
Yes, sir.
Fine. Now, please. What I told you right now, we are going to learn one more concept. That is the concept of income deemed to accrue arise in India. I had shown you the entire content of section 9 from the beginning. Right? There is a list of items are there which are income which are deemed to accrue arise in India. Section 9 you have already seen, yes or no? This chart in fact summarizes that provisions. Some of these important provisions we are going to discuss now. But before going to 9.1 again, as we had planned, that we quickly also will be talking about the dividend income, which are there under section 8. Remember, section 8 was dividend. So first let us cover it, let it go in a sequence. 9 anyway, it is summarized, so we can see it. Now section 8, if you see this provision, it talks about dividend. Any dividend, what is dividend? It is defined under section 222 A to E. In these things, certain items are there, all those things are dividend. Any dividend declared by a company or distributed or paid shall be deemed to be the income of the previous year in which it is either declared or distributed or paid as the case may be. So if you're talking about the dividend, if it is declared during the previous year or distributed during the previous year or it is paid as the case may be, it will be deemed to the income of that previous year. It may be just declared, might not have been paid, but still it is income because what the provision says, declared, distributed, or paid. Is it clear to you? Provisions for dividend.
Yes, sir.
But if it is not a dividend, in the sense, if it is not a final dividend, if it is an interim dividend, some companies declare interim dividend also. During the year, they may declare interim dividend, meaning this is not the final dividend. And this interim dividend shall be deemed to be income of the previous year in which it is unconditionally made available. This is the provision. That means interim dividends are not paid or not considered as income on the basis of declaration, distribution, or payment. For final dividend, if it is declared, distributed, or paid, if any one thing has happened, then it is income. But for interim dividend, what the law says, when it is unconditionally made available. When it is made available to you unconditionally, it cannot be taken back. So you can say one evidence when things are when dividend is made unconditionally available is that when it is already reflected in your bank account. You can say it is made available, unconditionally made available, you can do anything. You can use it, isn't it? So when it is reflected in your bank account, then you can say it is unconditionally made available to me, and then only it will be taxable as an income of the previous year in which it is unconditionally made available. This is the provision of dividend which are discussed in section 8. Is it clear to you?
Yes, sir.
Okay. Now let us move to section 9. Okay, section 9, series of things are there. One by one we'll see. First of all, you see point number 1, property income. If it is situated in India, let us see how that is to be taken. So capital assets being shares of the company registered outside India shall be deemed to be situated in India if the shares derive directly or indirectly its value substantially from the assets located in India. So friends, try to understand this. First thing I told you, the property income is taxable if it is situated in India. Suppose somebody is having a property here and he is getting rent. The property is situated in India, so rent is also deemed to be arise in India as per provisions of section 9. Is it not? Yes or no?
Yes, sir.
Okay, so property income, we have to see where the property is situated. Now, but if you're talking about property shares of a company, and the company is registered outside India, that means think of a company which is registered in Singapore, and you are having property and shares of that. But still, that income shall be deemed to be situated in India if the shares derive directly or indirectly its value substantially from the assets located in India. How it is possible? Can you think of some situation? Let us say there is a Singapore company who doesn't have any asset, only few assets are there in India. So the shares of those companies or the value of the shares of that company will be derived substantially from the assets located in India. Is it not?
Yes, sir.
So if someone is holding shares of that company, then any income out of that share shall be deemed to be situated, shall be deemed to be accruing arising in India because shares shall be deemed to be situated in India. Is it clear to you?
Yes, sir.
Property income, what I told you, depends upon the situation of the asset. But in case of foreign company, normally shares are situated in a foreign country. Is it? The Singapore company means even if you are having shares, so shares shall be situated at the foreign country. You can say the shares are situated in a foreign country. But in which case shares shall be deemed to be situated in India if that company is deriving the value of shares substantially, directly or indirectly, from the assets which are located in India. Okay, that company's shares value depends on the Indian asset. If that is true, then it will be considered that shares are located in India. Therefore, any income which is generated out of shares shall be deemed to accrue or arise in India. Hope you have understood this concept.
Yes, sir.
Okay. Now, business income. Here you have to see if the business is generated through a business or professional connection in India. If there is any business connection or professional connection, then income shall be deemed to accrue or arise in India. But now here you see, you have to justify whether there is a business connection or professional connection. Then only that income shall be deemed to accrue or arise in India. What is that business and professional connection? We have to see that. Okay. Now you see, I'm giving you some example. And or you can see, which is referred in section 911, that what is business connection. So if a non-resident has authority in India who habitually concludes contracts, maintains stock, or secure orders, then you can say there is a business connection in India. That means in India, he can conclude contracts, he can maintain stock or secure orders. But business connection does not include business of which all operations are not carried out in India. That means some parts are carried out in India, some parts are not carried out in India. Particular operations parts or purchases for export or availing broker service, collection of news and views for news agency business, or shooting cinematography business, or activities confined to display of rough diamonds in special notified jewels, essential. These things will not constitute business connection. Are you getting?
Yes, sir.
Suppose a non-resident is coming or a foreigner is coming to India. He is purchasing some items in India from India. Okay. And taking it to his country and selling it there. And he's generating some income. Can you say that income is generated from the business connections in India? I repeat the example. A foreigner has come to India and purchased so many items and took along with him to his own country. And there he sold it and some profit. And if this profit is generated from a business connection in India, then it will be taxable. Now you have to conclude, you have to apply the principles of law. On that basis, you have to say, is it from the business connection in India?
No, sir.
No. Why it is no? Now, answer is here. When you say business connection, you have to establish that is whether he is having any authority in India, such as a branch office or any kind of thing, where contracts can be concluded, stocks can be maintained, or orders can be seeked. Answer is no. And this doesn't include purchase for export, which what we are talking about is a situation when things are purchased for export. So purchase for export means this activity is not from business connection in India. Or let us say he used a broker to purchase for him. That's also not business connection in India. Let us say he is collecting only news and views. Someone is coming to India and collecting some news and views, and in a foreign country is doing something, news agency business is earning profit. That is also not from business connection in India. Or some person is generating some profit from shooting cinematographic business. If the person is in cinematographic business and the individual partner, shareholder should not be Indian citizen. That means foreign citizen should not be Indian citizen or resident. If that is the case, that will also not be considered as business connection. So only when there is an authority in India who habitually concludes contract, habitually, that means repeatedly it does it. That's possible only when someone is having a branch office, sales office kind of thing. Then only you can say there is a business connection. And that office maintains stock or secure orders. Then you can say there is a business connection. Is it clear to you?
Yes, sir.
So in case of business income, you have to check the business or professional connection. But here, to understand that thing, you have to apply the principles of law. On that basis, you have to decide. Now coming to the next concept is salary. Salary shall be deemed to be earned in India if services are rendered in India. Okay. And it also includes, or salary shall also be deemed to be earned in India if services are rendered outside India, provided it is payable to government employees who are citizens of India. So if services are rendered in India, then no doubt it is always deemed to accrue arise in India. But let us say there is an Indian embassy in Australia. Okay, the employees there are government employees. So these are the services which are rendered outside India. But since it is paid to the government employees who are citizens of India, then that will be deemed to be earned in India. Okay, but there might be some Australian citizen employees. That is not deemed to be earned in India, because even if they are government employees, but they are not citizens of India. So services rendered outside India, provided it is payable to government employees who are citizens of India, shall also be deemed to be earned in India. Is it clear to you?
Yes, sir.
But however, you have to remember some related points. That allowances to government employees for services rendered outside India are exempt. For example, the example I gave you, then an Indian government employee is working in Australian embassy in Australia, then any allowances given to that government employees is received outside our country, that is received in Australia, is exempt under section 10(7). Allowances are exempt, but salary is exempt. Okay. Some people may go on leave travel concession. They may go on LTC to a foreign country. Let us say you are working in a bank in India and you are traveling on LTC to a foreign country. Let us say you have gone for 1 month to Switzerland. That 1 month salary will be receiving. But in 1 month, you are located in Switzerland. Now question comes, then 1 month salary will be deemed to be received in India or received in Switzerland? Here answer says, LTC for the period of service rendered in India shall be deemed to accrue in India. Here it will be deemed that LTC will be accruing to you because of your Indian service. You have rendered services in India. So that month salary, that LTC shall be deemed to be accruing in India. Okay. Did you understand?
Yes, sir.
Now coming to pension. Pension received abroad for services rendered abroad. Okay. Pension received abroad for services rendered in India, it's 100% taxable for all because it's an Indian income. But pension received abroad for services rendered abroad, this is a totally foreign income. So this is not taxable in India for non-resident and for resident, not ordinary resident, because this is foreign income. But it is chargeable to resident and ordinary resident, because for resident and ordinary resident, his global income is chargeable to tax. Indian income as well as foreign income. So foreign pension is not taxable for non-resident and also not taxable for resident and not ordinary resident. But it is chargeable to tax for resident and ordinary resident. Is this concept clear to you?
Yes, sir.
Well, friends. Next concept is one more point regarding dividend income. Dividend income paid by an Indian company outside India. Indian company, but dividend income is paid outside. Please remember that dividend paid to non-resident is deemed to accrue or arise in India only on payment, not on the basis of declaration and distribution. Okay, if dividend is paid to non-resident, it shall be deemed to be accrue or arise in India only when it is paid. Just because it is declared or distributed, it will not be considered as deemed to accrue or arise in India. There is one more connected point you have to remember. Dividend from Indian company is exempted under section 1034. So when you will be learning that exempted provisions at that time, you will understand. Okay, so this is the concept you need to remember as regards to dividend income. Coming to the next concept is interest income. Here you see, look at this table. You'll be seeing similar few other tables also. Here we are talking about interest income. And we are talking about interest which will be deemed to accrue or arise in India. Friends, try to see, you have to see who is the payer. If the payer is an Indian government, then there is no condition. That means always it will be deemed to accrue or arise in India. Is it clear?
Yes, sir.
Payer is Indian government, you have to say it is deemed to accrue or arise. And payer is a resident in India, like you and me. Suppose we are resident in India, we are paying that. Then you have to see funds must not be used outside India. That means either fund must be used in India or funds might be unused. But the law says the fund must not be used outside. Then only it will be deemed to accrue or arise. Otherwise, did you understand? If funds are used outside India, then it is not deemed to accrue or arise. If the funds are not used outside India, then only it will be deemed to accrue or arise in India. Is it clear?
Yes, sir.
Third situation is non-resident in India. That means payer is non-resident. That means a foreigner is paying, assume. And if a non-resident is paying, then you have to see funds must be used in India. Foreigner is paying, but funds are used in India. If funds are used in India, then it is deemed to accrue or arise in India. But if it is not used in India, then it is not deemed to accrue or arise in India. Did you understand the complexities of interest? So it depends upon the payer, whether it is paying Indian government. If it is Indian government, it's always deemed to accrue or arise in India. If it is resident in India, you have to see the funds must not be used outside India. If it is a non-resident in India, then you have to see fund must be used in India. Okay.
Yes, sir.
Similar conditions are there. This is regarding royalty payment. Here also you have to see who is the payer. Payer is an Indian company, no condition. Resident in India, then you have to see the right, property, or information for which royalty is paid must not be used outside. Or payer is a non-resident in India, then you have to see the right, property, information must be used in. Then only it will be deemed to accrue or arise. Understood this?
Yes, sir.
There is again one specific exception to that. So this royalty shall not accrue arise in India if paid by a resident to a non-resident manufacturer for transfer of right in respect of computer software or equipment under approved policy. So government is having some approved policy. Under that approved policy, if some royalty is used and royalty is paid by resident to non-resident manufacturer, then that shall not be deemed to accrue arise in India. This is a specific provision. It should be in respect of computer software, and otherwise this normal provision is. Now, next item is fees for technical services. You see, conditions are also similar. Indian company, no condition. If fees for technical services are paid by Indian company, Indian government, it will be always deemed to accrue or arise in India. If it is paid by a person who are resident in India, then you have to see services must not be used outside India. If the payer is non-resident in India, you need to ensure that services must be used outside India. Then only that income shall be deemed to accrue or arise in India. Okay, you see conditions are more or less similar. Interest, royalty, and fee for technical services. Then friends, next item is income from property. In which situation it will be deemed to accrue arise in India. If it is movable, immovable, tangible, intangible. If it is situated in India, then its income shall be deemed to accrue or arise in India. Is it clear?
Yes, sir.
Yes, sir.
Okay. Sometimes, in case it is difficult to find out whether income is accruing arising in India. So, if the assessing officer is of the opinion that income arising to a non-resident cannot be definitely accepted, that how much income is arising to the non-resident cannot be definitely accepted, he may apportion in the following manner. That means how much of income is deemed to accrue arise in India, how much is outside India. On what basis he will do? Let us say there is a business, there is some profit which needs to be distributed, Indian profit or foreign profit. Then assessing officer can, what he can do, he may do it in the following manner, as a percentage of turnover, or by applying this formula, business income as per Income Tax Act. Total business income will find it out, divided by receipts so accruing or arising, that means accruing arising in India, divided by total receipts. That means proportionately we find out how much of the business income is accruing or arising in India. Or in any manner as he deems fit. That means assessing officer will apply his mind either on the basis of percentage of turnover or proportionately he can decide how much income is accruing or arising in India. Are you getting this point?
Yes, sir.
So friends, some of the provisions of section 9 I discussed, but I expect all of you please read the section 9 so that you can understand, or in appropriate time you can refer to section 9 to understand in which situation income shall be deemed to accrue arising. This concept was important for us because on that basis we are supposed to compute the total income. So we have understood what is the meaning of received in India, deemed to be received in India, right? Accruing or arising in India, and deemed to accrue or arise in India. All these four concepts are important for us because with the help of this concept, we'll be able to apply the provisions of law. Right. So once we have confidence that we can segregate that which income is received, which is accrued, on that basis, we can link that income to the residential status and then decide which are the income that will be taxable depending upon the residential status. I think this concept is clear to you. Why we are learning all these provisions, why we learned residential status, is it clear to you?
Yes, sir.
Yes. If this is clear to you, then what I understand that we have created a foundation. Now we'll be learning how to compute income tax. Income tax computation as you know, under 5 heads income salary, there might be number of sources, but heads are only 5. So what we'll be doing in next session, we'll be starting with very important head of income, that is income from, that is the salaries. Okay, so you'll be understanding the provisions of salary chapter. So as you can see, when we are learning salary chapter, we'll be learning only 3 sections, section 15, 16, and 17. Even if 3 sections are there, you will find this is the largest chapter. Okay, a very big head will be, it will take several classes, several sessions will be covering, but salary income is our plan. In between also, section 10 is one more important thing. I had shown you that thing earlier. Section 10 contains what? Income which do not form a part of total income. Have you remembered? I had shown you earlier.
Yes, sir.
Okay, so along with salary chapter, we'll be also learning some of the provisions. Some of the items of section 10 will be covered along with salary chapter. Right? And if you want to learn, you can again visit section 10, refer to the act, you can learn that thing directly. So with this, I am closing out today's session. So we'll catch up with the next session with the chapter salary. Thank you very, very much. Do you have any query up to this?
No,
No,
sir.
sir.
No. Thanks a lot.
Thank you.